I'm Ed Evans, CEO of Consumer Cellular. Ever wonder why the big wireless companies want you on an unlimited plan? It's because they need you to help cover the cost of the 20-somethings who are using a lot of data every month. Fact is, according to the latest research studies, most people 50 and up, like me, only use 12 gigs or less each month. Don't get bamboozled by big wireless. At Consumer Cellular, pick what suits your needs. Whether it's 1 gig, 5, 10, or unlimited, the point is, pay for exactly what you need and nothing more. We use the same towers as the big guys, but since we don't own and maintain them, we can pass the savings on to you. Our plans start at just $20 a month, and you'll get the best customer service in the business. I want to invite you to join the millions of people who choose something better than big wireless. Because if you're not using all that data, you're probably getting used.
Call 1-888-FREEDOM, visit consumercellular.com/facts or a store near you. Plans include $5 credit for auto pay and e-billing. See site for additional facts.
You're locked into Money Matters Radio, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
October 24th is National Food Day, a perfect time to celebrate fresh, local food right here in Massachusetts. Fall harvest season is in full swing with crisp apples, sweet pears, pumpkins, squash, cranberries, and hearty root vegetables at your neighborhood farmers market. Markets are still open, so grab your bag. Support local farmers and bring home the flavors of autumn. Sponsored by Mass Farmers Markets, helping grow farmers markets across the state. Find your local market at massfarmersmarkets.org.
Marc Vonner is the CEO of Veterans Development Corporation. Marc is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Marc comes from a proud military family, including his father Victor and his brother Timmy. Marc talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Marc is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Marc, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Marc Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month titled Understanding Required Minimum Distributions. Mike, a lot of changes in the RMD landscape. When do people have to take RMDs from either IRAs or Roths?
How old are you?
Me personally?
So this does start changing now. It is currently 73 for a lot of folks. For some younger folks, it's actually now going to be 75 years old for your traditional IRAs and 401ks. And so that started at 70 and a half just a few years ago. And so this is a new set of rules for a lot of people.
When you look at how the penalty situation has evolved, this is one area that's actually gotten a little bit more lenient in recent years. And so that's something where if you are new to RMDs, there are some incentives if you've missed one to get that squared away as soon as possible.
There are, but, key takeaway. Understand these rules and don't miss your required minimum distribution, because there are still penalties for something that, again, is completely avoidable. Yes, the penalties used to be bigger. They are less less stringent now and a bit smaller, but it is still unnecessary extra taxes and fees that you will end up paying if you do miss your required minimum distribution. So get our guide and learn a little bit more about how all of this works.
Folks, the guide is titled Understanding Required Minimum Distributions, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by visiting armstrongadvisory.com. Again, that number is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Happy Thursday. Welcome back to the Financial Exchange. It's Mike, Marc, and Tucker with you. We've got Russian oil sanctions. We've got Tesla earnings and Elon doing a typical weird freak out during the earnings call, which is entertaining. I guess it wasn't a freak out, but it was a demand for money. We have got Beyond Meat Stock continuing to go all over the place in meme stock mania once again. And so we're going to dive right in with, I think, probably the biggest story of the day, which is the price spike on oil. This is the largest single-day move on oil since Israel-Iran tensions earlier this year. We've got oil prices on West Texas crude moving up over 5% in early trading. So I was kind of flummoxed because every story out there is talking about the price moves. It's talking about how significant it could be for India and China, and almost no news outlet out there told me what the actual threat of sanctions are. I was reading through the Wall Street Journal piece and the CNBC piece and everything out there, and it all was just, oh yeah, there's new sanctions. They could be really important. It depends on whether or not it causes India and China to stop buying oil. But I think what we have here is actually a threat of sanctions on companies that buy Russian oil now, which has not yet existed. Prior to all this, it was the threat of sanctions on Russian oil executives, threats on the companies themselves. We now seem to be threatening access to the U.S. financial system for buyers of the Russian oil finally, which is making apparently some Indian refiners take a second look at whether or not they should be doing this. But what's your take on what we are actually threatening in terms of sanctions and what the reaction has been from those out there?
No special. Your point, it's hard to. I've not seen any work on this yet because we don't know the specifics. It's tough to quantify the once you know, I think, what the level and the breadth of the sanctions are, you can pretty quickly quantify the impact. And assuming demand stays constant, which is a dangerous assumption, I guess, you can then estimate the impact on supply. So I'm waiting, like you are, Mike, like we all are, for estimates of how much damage in terms of and this is necessary damage, arguably. It's the right thing to do geopolitically. Maybe we just have to start with that assumption. This is a necessary next step. We've tried diplomacy for the last several months. The administration has been exceptionally flexible. You might even say nice to Russia. Hasn't worked. Okay, fair enough. Now we have to move to something punitive.
So what has been happening over the course of the last several years is that European and Western nations have not, in any large degree, been buying Russian oil. It has continued to flow to China. It has continued to flow to India, who have been skirting any threats of sanctions and continuing to buy it. What we do know is that India's top refiner this morning publicly said, the company's name is Reliance, and they said on Thursday it would, quote, recalibrate their imports in line with Indian government guidelines, specifically after the U.S. measures against Russian groups Rosneft and Lukoil are reverberating right now. And to those that are familiar, basically this is the world's largest refining complex. It's led by the richest man in Asia, and basically saying, hey, if the threat is that we won't be able to access dollars, for example, then certainly we will finally stop buying this stuff from Russia, which we have been buying at a very steep discount for the last several years, because guess what? You can't sell it just about anywhere else.
Yeah. Look at the response of markets. That probably tells you all you need to know. West Texas Intermediate, our benchmark in this hemisphere, is up a little over 5%, which is a totally rational response.
Investors seem to be thinking that this might be serious. Obviously, if Russian oil cannot be purchased, maybe the Chinese continue to purchase it. But if India steps away, China probably can't fill that entire, gap in purchases. And so we will see where it goes from here. Or potentially the sanctions are strong enough to deter Chinese buyers as well. But I don't know that there's much evidence of that. What's your larger take, though? I mean, oil prices generally, other than this jump today, have been on a pretty steady, other than a few spikes here over the course of the, back in June, for instance, when we struck Iran? June of this year?
I forget.
Sorry. Yeah, it's
seems
tough
like
to keep
years
up
ago.
with, but we've been on a pretty steady decline, and I don't think this is all because of domestic oil production or anything like that. It seems to me that there might be an underlying trend here too, and lower oil prices, while I certainly appreciate to fill up any of my 3 cars, are not exactly a great indication for where the world economy is. Is that still fair to say in 2025?
Lower oil prices are fair. No, yeah, I think that's. I'm just thinking back over the decades. I mean, obviously, we produce a lot more than we used to here in the United States. So there are pockets of the U.S. economy. They're more than pockets. They're big regions now that are very dependent on energy prices. So people in that corridor from the Dakotas down to Texas and elsewhere are cheering this morning. So this unlike 20 years ago when you could say unequivocally, and in the 90s when you in late 80s, unequivocally lower oil prices are good, high oil prices are bad for the economy. Late 80s were a boom period. Inflation came way down, in part because of better monetary policy, but in part too because we got lucky. It was the flip side of the 70s in many ways. Energy, we all remember oil prices crashing in the mid-late 1980s, and again in the very early 1990s, 93, 94, when it hit something like $10 a barrel. That was unequivocally good. It's no longer unequivocally good, I think is one way to answer your question, Mike. There are probably more globally now, which I think was the broader context you were suggesting. There are obviously more winners than losers.
Yeah.
I don't know. Hard to say how it would all. If this represents now a change in the trend, as you said, it's been kind of bumping around high 50s, low 60s for several months,
which is not a level that domestic producers are terribly comfortable with.
No, they want minimum. These shale guys who hard to access oil through so-called fracking techniques, they need 70, 75 something just to break even.
Yeah.
So they're not making any new investments. That hurts energy independence, but helps places like Massachusetts, which don't make any.
Sure.
The United States economy is pretty heterogeneous. It's pretty varied. We prefer lower prices. Other regions prefer higher prices. So net effect, hard to say.
The other offshoot of all this being that because that Domestic oil production has been fine, but not exactly growing. The same goes for nat gas production, because that is a direct offshoot of some of the fracking activities that we do. And so nat gas production also has been down here domestically. Let's go ahead.
There's the Fed angle, too, which we could talk about. I mean, this complicates the inflation picture.
Yeah, I guess that would be the big piece here, too. We'll get an inflation reading tomorrow in spite of the government shutdown. But oil prices generally have been a real help to the Fed over the course of the last 12 months.
Yeah.
If you take a look at the last 12 months, we've had, about 3% inflation, depending on which reading you're looking at. And a big help to that has been that gas and oil prices have been down over 10% over that period of time.
And that may sound confusing because we often say the Fed, which controls the money supply, is responsible for long-term inflation. This is true. But in the short term, because not every price changes every month, if oil prices go up by a lot, nothing else changes, the average goes up, and that's all that the CPI or whatever your preferred inflation measure is. It's just an average. So it can complicate the short-term picture. The Fed does have to think about it because it affects not only the headline number, but it affects our expectations. Perhaps nothing is more conspicuous than what we pay for gas, and that in turn drives what we expect inflation to do in the short term.
In any case, national average for gas prices now sitting at $3.07 a gallon. Obviously, we're not seeing that full price swing today with this action, but that's down from about $3.16 a year ago. We'll continue to monitor gas prices over the course of the next week or so as we learn more about these sanctions and India's willingness to buy Russian oil. Quick break. When we come back, Tesla reported earnings yesterday after the bell. What did they say? What did Elon have to say? And when are the driverless taxis coming to the whole nation? We'll cover that next year on the Financial Exchange.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network. Cushing & Dolan know that gifting assets can be one of the most emotional and challenging parts of estate planning. Their new guide, Making the Most of Gifting Assets, can help you learn what to consider before making a major gift, like your primary home or a vacation property, and avoid unintended tax problems. Call 866-848-5699 to get your copy, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences are putting the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping and the world-famous Megan's Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all three and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visitusvi.com. Cushing & Dolan want to help you avoid costly mistakes when it comes to gifting assets to your children. Their brand new guide, Making the Most of Gifting Assets, shares crucial strategies to help you protect your legacy and your family. Many people think gifting is always a good thing, but if it's done the wrong way, it can create real headaches. Even well-intentioned gifts can cause complications if your children are dealing with financial pressure or legal issues like a divorce. The guide also explains how a major gift, like a home or vacation property, could come with hidden tax consequences that may impact your entire estate plan. Before you make any big moves, arm yourself with the facts in this new guide from Cushing & Dolan. Call 866-848-5699 right now to get your copy. That's 866-848-5699. Or request it online at legalexchangeshow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Tesla stock down about 3 1/3% in early trading today after being down about 0.8% yesterday in trading. It's marked a fine year for them, actually, stock price wise. They're up about 12% for the year when you look at the full story here. But a lot of people kind of disappointed, I think, by the earnings call and the I guess the real facts of the earnings as well. The revenue came in beating estimates, about a 29% increase, $28.1 billion, whereas they missed on earnings by about 4 cents. The big push here was that they did make a lot of sales in September ahead of the expiration of the electric vehicle tax credit, which I believe was September 30th, if memory serves me. But the executives there really made the entire earnings call, once again, because this is what Tesla does, not about their business, but about their future aspirations, goals, and dreams. And robotaxi really took front and center there. So I don't know if it's actually going to happen, but we should talk about it. The service is expanding, or planning to expand, to 8 to 10 metro areas by the end of the year. Again, Tesla's robotaxi business is built on the idea of autonomous vehicles driving themselves. The only city they're currently doing this in, or attempting to do it in, is Austin, Texas, where they are not actually driving themselves yet. They still have safety drivers in the seat, monitoring the vehicle to make sure it's capable of doing this. And I guess here is my overall point on this. There are a lot of companies currently, a lot of very big companies, who do not robotaxis, but that do taxi services really well. Uber, Lyft, and Waymo have spent over a decade rolling out that business. In the case of Uber, they had to lose money on it for a good 8 years before they built up the customer base and the know-how to actually break even on this business model and make sure that it works for them. Waymo has been driving self-driving cars across Phoenix, San Francisco, LA, and I think a couple of other cities as well for several years now. And I'm just curious as to whether or not Tesla's actually going to be able to, A, make a dent in this business model, and B, make a profit in this business model, because it's not just some magic thing, and it's not as though putting and deploying a whole bunch of driverless cars is going to be a cheap endeavor by any stretch of the imagination. Not to say they can't afford it. They've got plenty of capital, but this is a completely different business model.
To be willing to pay for future earnings what investors are currently willing to pay relative to, and shorthand for that's just the PE ratio.
Tesla stock's never been about those.
But you do have to be.
Right?
I mean, if you're an analyst, which I'm not an automotive analyst,
sure.
But I always ask, well, what does a serious, I was going to say believer, that's maybe the right word, maybe the wrong word, maybe a little bit unfair because it implies faith, maybe the right word because this all comes down to whether or not you think Musk can execute.
Yep.
Will we see cyber cabs in 2026? Will we see the mega battery pack in 2026? Will we see the Optimus robots being deployed on a large scale? This is all of these potentially revolutionary, not economy-wide revolutionary, but they could revolutionize little markets.
Yep.
Maybe they have broader applications. I don't know. Not my area. But a lot really turns on their ability to launch these things in 2026. What excuses, for lack of a kinder word, will champions in the analyst community make for this when one or more of those things don't happen in 2026?
What do you mean? I mean, Elon always executes on his promises.
This is what I mean. I mean, there's a pattern here. He's executed on many of them, but not as ambitiously as he had asserted, or
and almost never on the appropriate timeline.
That's what I'm sorry. I was being very long-winded. Right. So, what excuses will we hear next year when 2 out of 3 of these? I just ticked off a few initiatives. Again,
sure.
Not my area. Maybe there are more. Maybe that's not. I think, though, based on casual reading this morning, that's what people are expecting. What will the judgment of analysts who ultimately make the buy, sell, or hold recommendations that we all have to rely on, because we all don't meet with Tesla management, go on site and look at their factories, and do the same with other manufacturers so as to have reference points. It's just not most people's area. What are we going to make of it when they don't meet these goals next year, assuming they don't?
I'll also point out for a moment here. So Waymo, again, is the Google-owned subsidiary that does self-driving taxis in a number of different cities. They have been in Phoenix for 7 or 8 years now, mapping out roads and successfully driving people in autonomous vehicles all around the city of Phoenix. There are some exclusions. You can't go everywhere, but in a large portion of that city, you can use one. I've used it on 3 or 4 occasions. And my general conclusion was really cool because it's a new technology and you get to sit in the back seat and there's literally no driver there, and it's just a neat, weird experience. But I can honestly say it's not better than or cheaper than calling an Uber. One, your areas are limited where you can go into. They don't go on highways. They drive pretty slowly, and so... And the price differential isn't really there either. You are still paying a pretty hefty price for one of these autonomous vehicles. And so what you're accepting by driving a Waymo, which is not Tesla, maybe they have a completely different idea of all this, is a really cool product to be in. I don't need to be hassled by a driver that I'm worried about. But I need to be willing to accept about an extra 10 minutes of drive time. And there's no pressure to tip the driver because there's no driver.
Okay, so if it's not cheaper and one cab can still only drop off one person, you could ride share.
Yep.
But it's still not really scalable. I mean, only so many human beings can fit in a cab, and a cab can therefore only transport so many fares at once.
Yep.
If it's not cheaper, then this technology will not, by definition, it won't revolutionize anything, even that sector potentially. Go ahead.
I think Tesla's dream of this and what they've thrown out there is, look, you're going to buy a fleet of these things as an individual and run your own business or of a taxi, or as just an individual owner of a Tesla, you will be able to rent it out onto a fleet of self-driving cars. So imagine for a moment here that you, Marc Fandetti, drive out to Needham, Massachusetts, and then you say, okay, Tesla, now go, make me some money as a taxi service for
until
the next
you need
8
a
hours.
friggin' pardon me, but until, your kid's sick, come pick him up.
Yeah.
Or somebody had to be admitted to the hospital. Where's my car?
Right.
Oh, it's in Dover. Then I got to use your car as a fare.
Yeah.
Would you do that? Would you do that during the day?
No, I would not.
We can't. In the business we're in our day jobs here, you need to drive to other offices.
Sure.
So,
but even if I had that commuter job into downtown Boston, I'm not sure that Americans are really okay with that idea.
The whole point of a car is optionality.
Yeah.
It's there when I 999 out of 1,000 days, I don't need it unexpectedly. But when I do, boy, it's so there's an insurance. Optionality is a finance person's way of saying there's an insurance element to owning a car. It may sit in my garage for a week, but
frankly,
it's there when I need it.
I would suspect that we're a good decade away from that idea actually being possible. of, a lot of people being able to drive to work in the morning and then just send their car out as a self-driving taxi for the day and actually have it make a meaningful amount of money to be worth it.
I don't know.
So,
You're not there and then the guy went to Taco Bell for lunch and then I got to sit in it later. I mean, think about all of these things.
Yeah, I think there are some very serious
no offense. We all love Taco Bell here. I'm not.
About so you meant to offend Tesla, not
Taco Bell. No, God forbid. No, we love Taco Bell.
Let's take a quick break. When we come back, we're going to have a full market recap coming up next with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
Hi, guys.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. Cushing & Dolan know that gifting assets can be one of the most emotional and challenging parts of estate planning. Their new guide, Making the Most of Gifting Assets, can help you learn what to consider before making a major gift, like your primary home or a vacation property, and avoid unintended tax problems. Call 866-848-5699 to get your copy, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. If you're approaching your 70s, you might be thinking about slowing it down, but the IRS is just getting started. Required minimum distributions, or RMDs, kick in starting at age 73. And if you were born in 1960 or later, that number jumps to 75. RMDs are more than just a box to check. They can impact your taxes, your income plan, and even what you leave to your heirs. If not done properly, it could mean big penalties, but getting them right might help keep your money working for you. Our latest guide, Understanding RMDs, breaks down how they work, when to take them, and strategies that may make them less of a tax headache and more of a financial opportunity. Request your copy today by calling 800-393-4001 or by visiting ArmstrongAdvisory.com. That number again is 800-393-4001 or ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan, with their master's in taxation. And today we're talking about the implications of gifting assets away. Todd, if you're trying to protect your assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, it's a very big difference, right? These irrevocable trusts that we do for Medicaid purposes, first and foremost, are incomplete gifts. So you're not actually making a gift at all when you put it into these trusts. But if you give it to a child, now you've made a completed gift. So, for example, if I gave away my house, and people do it, right? You are giving away the built-in gain in that house. You now don't have any control over the house. You can't sell it and buy another one if you want to move. You need the kid's permission for all of that. Plus, if you never sell it and you die, you've trapped the built-in gain for the kids. When they go to sell it, they're going to have to pay capital gains tax. Whereas if you keep it, you can control it, get a step-up in basis for the kids when they die, and still protect it from the nursing home through the trust. Either way, it's going to take 5 years. But gifting isn't always the answer.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy on their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are mixed amid another batch of third quarter earnings, including from IBM and Tesla. Wall Street's also seeing a jump in oil prices after President Trump announced new sanctions on Russia's two biggest oil companies. Right now, the Dow is down about 0.1% or 54 points lower. S&P 500 is up 0.25% higher or 15 points. NASDAQ up about 0.5% or 109 points. Russell 2000 is up 0.25%. 10-year Treasury yield up 2 basis points at 3.978%, and crude oil up 5% today, trading at $61.41 a barrel. Tesla falling about 3% after the EV maker posted a 37% drop in quarterly profit, citing R&D spending and lower tax credit revenue. Meanwhile, IBM stock is also dropping 3%, despite the computing company swinging to a quarterly profit and reporting higher earnings, noting that customers have shifted from experimenting with AI to using it at scale. Sticking with the tech sector, where several quantum computing stocks are seeing substantial gains after the Wall Street Journal reported that the Trump administration is in talks to acquire equity stakes in several quantum computing firms. IonQ, Rigetti Computing, and Quantum Computing are all up anywhere between 10 and 12%. Elsewhere, American Airlines narrowed its quarterly loss, saying it expects to end the year more profitable than analysts had been forecasting. Shares are up by about 3%. Las Vegas Sands posted solid third quarter results driven by the growth of its Macau and Singapore investments, sending that stock up by 12%. Honeywell up by 6% after the industrial giant posted better than expected quarterly results, and Intel will report their third quarter earnings after today's closing bell. I'm Tucker Silva, and that is Wall Street Watch.
Well, Mark, something that we don't frequently report on would be foreign elections, but in 3 days, NYTimes will head to the polls as the first legislative elections under Javier Milei take place, and some big questions to be answered here. This is the only reason we might consider caring about that here is because we've just loaned the Argentine government about $20 billion amidst a... Would you call it a run on the peso there?
Absolutely. They're in a full-blown currency crisis.
And the United States is now involved financially. We have loaned a significant amount of money, and these elections in 3 days could determine whether that run on the peso continues and we see a swing back in a direction of higher inflation and weakening peso. I think we need a little bit more context. So if you would, take a step back here. We've been talking about this now for about a month. It stemmed initially from a local election in the Buenos Aires area that surprised everyone in the Milei administration and moved in a very different direction from his economic goals over the course of the last few years. But where do we sit here, and what is the significance of these upcoming elections for U.S. investors and U.S. taxpayers?
Well, I'll answer the last question first, and then maybe we can backfill with context to make it all make sense. Argentina needs dollars to defend the peso. What does that mean? You buy and sell currencies on foreign markets, including the dollar, just like you buy and sell any other good. When investors are on the margin looking to buy something, they push the price up. When they're looking to sell something, they push the price down. The only way to buy another currency is with a currency. So, for example, an investor may exchange dollars or buy pesos with dollars or vice versa. Why does Argentina need dollars? Well, the peso has been falling because investors believe that it is overvalued. It takes too many dollars to buy a peso or too few pesos to buy a dollar. Milei has been keeping the peso, and he's not the first one to try to do this, artificially high because that helps him bring inflation down. He's done a great job bringing inflation down.
That's a bit technical. So the reason keeping the peso at a reasonable pace keeps inflation down is because
imports are cheaper.
Argentina imports a bunch of stuff, right? Like if they want to buy oil, they can't try and buy it in pesos. They need to buy it in dollars. And if you have to exchange your pesos now for fewer dollars, then
imports
it's
get more expensive
to buy
when the
those
peso,
things.
when your domestic currency goes down. So
and especially when you are a country like Argentina that tends to import a fair bit of stuff, you have that trouble, which is obviously. I explain all this because most of us are operating under the American context where we are the reserve currency for the world.
Which means we can print as many dollars as we need to do whatever we need to do.
We also have a significantly more diverse economy than Argentina's, which is heavily agricultural.
Yeah, there's really no comparison.
Not really.
You're right. We're oblivious because we have the exorbitant privilege, as a French premier once called it, of owning of maintaining, being custodian, whatever, of the world's reserve currency.
It's even different from Europeans too, where
very much so.
they might not have the world's reserve currency, but they all operate on the euro. And once again, while Greece's economy might be heavily agricultural, they still have the benefit of other Eurozone countries that produce a whole bunch of other things and help stabilize that currency. Argentina's in a very different place.
Argentina needs dollars. I think it's the easiest way to think about this. It's because it can get hairy, and this is a specialty in and of itself.
Yes.
So we've agreed to give them dollars,
we
loan
being
them
the United
dollars.
States
Very unusual. We did it with Mexico 30 years ago. Circumstances were different there. We could talk about why that's the case. It actually worked out. So we have, in theory, loaned them in the form of a swap. Swap is just like it sounds. You give me some of your currency. We gave them $20 billion in exchange for $20 billion in pesos.
I would say it's more than in theory. We did loan them the money. It's just a real question as to whether or not they have any ability to pay it back.
They may run out of dollars with which to pay us back, in which case we're out $20 billion.
Yeah.
So that's why to answer the question you started this segment with, that's why it's of interest to us, the outcome of these elections. If they don't go Milei's way, and this happens every several years in Argentina, Argentina elects a center-right government, a more conservative government, if you like. People
which
who are
is
going to
Milei.
be tight with, which he is. Yeah, he's more he's more libertarianish than past governments. He's been more ardent about enacting spending cuts and getting inflation under control. But this is not the first time. In this century alone, it's been tried 3, maybe 4 times. You lose count. A politician comes in, a center-right politician comes in, says we're going to clean up this mess. They cut spending. They try to get inflation down, but they keep the peso within a band relative to the dollar. It gets overvalued. Speculators attack it knowing it's overvalued. They run out of dollars. They run to the IMF. When you run out of dollars, you default effectively. If you're a foreign country, you can't print them like we can.
Yep.
And they need a bailout. They've had 3 so far this century. So what's happening here, Mike, many experts, and again, this is a specialty, so you have to be careful who you read here. Most experts agree the peso is overvalued. They're going to run out of dollars. We've seen this movie before. And
the question will be, if this election goes in the other direction, and the guesses are correct that the peso once again falls apart, what does the United States do then?
We're out $20 billion effectively.
Or do you double down?
They'll exhaust their... No, well, the president has already... Trump has already said if the elections don't go our way, we're not going to help them anymore, which is the exact opposite thing of what you should say. You should say we are committed to Argentina. If you are, and I don't know why you would be, they absorb only a very small fraction of our exports. We don't share a border with them, so there's no risk, as there was with Mexico, of a destabilized country sending a lot of refugees, if you will, over the border. So the same rationale which applied to our bailout of Mexico 30 years ago, which again worked out for us financially, does not apply here. So I'm a little bewildered by it. I love Milei too, but I ain't going to give him $20 billion when we're making big sacrifices elsewhere. It's actually kind of nuts.
You're just a huge fan of his Rolling Stones cover
band. But like you said, he's libertarian. I mean, you got to love it, or at least I do. So if the worst thing in the world you can do is what was what Trump actually did, which is to say we're walking away from this if the vote doesn't go our way, because speculators know we're not going to back them up any further, so they're going to eventually take the peso off its peg. Milei's got to devalue either way. It's just a question of, is it going to be abrupt and steep, or is it going to be something more orderly? We'll know more on the 27th.
Yeah. So Saturday elections, and we will see which direction they go and whether or not it is enough to stabilize things in Argentina and therefore stabilize the future of the American loan to the Argentinian government. Let's take a quick break. When we come back, let's talk a little bit about rare earths. They've been back in the news once again this year after taking a bit of a hiatus over the last few months. U.S. and China rare earth conflict. That's next on the Financial Exchange.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Marc Vonner is the CEO of Veterans Development Corporation. Marc is a career military man, having served nearly 20 years, and we are so proud to have him and his business as a key partner and a presenting sponsor of the DAV 5K Boston. The DAV Department of Massachusetts does incredible work, and it's one of the first organizations that Marc became familiar with after his military service ended back in 1984. As Marc built his company, he knew he'd be giving back to fellow veterans who needed jobs, support services, medical supplies, and so much more. Marc works with disabled veterans every day, and it's one of the key reasons why he's such a big supporter of Dan Stack, the DAV Department of Massachusetts, and the DAV 5K Boston. You can join Marc Vonner and his team and make a donation to the DAV Department of Massachusetts or become a sponsor of the DAV 5K Boston. Simply visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Turning 70 isn't just another birthday. It's when the clock starts ticking on your retirement withdrawals. At age 73 or at age 75 if you were born in 1960 or later, you need to start withdrawing money from your IRA. They're called required minimum distributions, and missing one can mean big penalties. Taking the RMDs at the wrong time can also spike your tax bill. Even the type of account matters, since your IRA and 401k follow different rules, which could get confusing fast. Our new guide is called Understanding Required Minimum Distributions. It breaks the process down in simple terms so you know when to start, how much to take, and ways to manage the tax impact. Request your copy today by calling 800-393-4001. That's 800-393-4001 or ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Cushing & Dolan know that gifting assets can be one of the most emotional and challenging parts of estate planning. Their new guide, Making the Most of Gifting Assets, can help you learn what to consider before making a major gift, like your primary home or a vacation property, and avoid unintended tax problems. Call 866-848-5699 to get your copy, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Looking for a getaway that's easy, warm, and unforgettable? Discover the magic of the U.S. Virgin Islands, St. Croix, St. Thomas, and St. John. Just a short flight from New England with no passport needed and no money to exchange. Soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your fall escape now at visitusvi.com. That's visitusvi.com.
New York Times this morning. The U.S. struggles to break out from China's grip on rare earths. On Monday of this week, the U.S. announced a strategic agreement with Australia to invest billions of dollars in order to develop mineral supplies. There's been other discussion of price floors for certain rare earth materials, strategic reserves of certain rare earth materials. I'm just going to acknowledge that, accomplishing something like this has a lot of challenges. We don't have a lot of expertise in mining this stuff or a whole lot of tolerance compared to the Chinese government for the side effects of mining this stuff and the disastrous environmental repercussions of doing so. But I will also say that I'm not sure it's reasonable to judge our success or failure at breaking away from China's rare earths in a course of like a month.
Yeah, it's been our dependence has been a long time in the making. We sold company, GM sold a subsidiary to China like 15 years ago. So that expertise takes time to build up. We don't have it.
It's been since April that they've been restricting this stuff.
I mean, Mike, a lot of you could put part of the blame on the George W. Bush administration, which I think approved a couple of those sales. So I guess my point is it's been a long time in the making.
Yes.
It is a little baffling in retrospect that nobody thought. Well, it's not true that nobody thought, but that the voices in favor of independence in this area, given its
frankly, our policy towards everything trade related with China over the course of the last 30 years has been confounding.
It's been a little bit naive.
Confounding in every way other than
it's been a little bit naive.
How can we make more money? Right, I mean that's what it's really come down to is okay. What's the lowest cost place to produce?
Well, we treated China like any other big potential trading partner.
Yeah,
not as a strategic adversary.
Right,
because they appear to be going in the other direction. I mean, if you read stories about engaging with trade in China on a trade basis, on the basis of trade in the mid-90s to 2000, all the way up to 2015, the stories were about China
opening,
liberalizing, becoming more like us.
Yep.
Like everybody's going to wear blue jeans, listen to Bruce Springsteen, and eventually they'll be democratized. So things have gone.
That is how it happens. First come the blue jeans, then come the Springsteen,
the Sony Walkman,
and then they democratically elect presidents.
Then NBA basketball. Then I mean, that was the thinking of the era, though. I mean, it seems really muddled and like stupid now. But
so I mean, that is my only commentary: is that doing this is going to be extremely complex. I think that we are now committed to doing so, and it is going to be probably very unprofitable because my guess is that the Chinese at some point will look at the threat of a domestic U.S. and Australian partnership on rare earths. Presumably there's some of these things in Canada that will get out of the ground. Iceland, Greenland, all of these nations are going to be pushing hard to produce this stuff. But it's not going to happen in 6 months. And that's really the timeline that we're looking at here because the latest announcements on rare earth restrictions were done in April of this year after the U.S. proposed trade tariffs on China. And so any sort of judgment I can pass on this at this stage is way too early. Entirely way too early. But I do think looking at this as, this is going to be a real profitable industry in the future, I have some serious doubts about that because if it's going to be profitable, it's going to be profitable because the United States will set a price floor on it and basically subsidize the hell out of it. Go ahead. What are you going to say?
This should be one of those areas where there is or ought to be, tremendous bipartisan support for a Manhattan Project-like initiative. I mean, something broad in scale, clear objective. Go ahead. Go ahead.
It reminds me of the CHIPS Act from
something like that.
2
Look,
years ago.
we didn't like it. I didn't like it
You
because
didn't like it, yeah.
if not, why microchips and not potato chips? And why, what is actually essential here? But it would be nice to have a coherent. The administration, I guess, has been pretty consistent, but I've not sensed a coherent framework for isolating China, if that's what we need to do, explain to the American people why, and then investing billions, maybe trillions of dollars in our own capacity, explaining that the threat is existential. If we do not do this, we'll be at such a severe disadvantage in terms of weapons technology in 15 years that will effectively be a sitting duck. That is an unacceptable risk. Any investment is worth it. No matter how modest the payoff, it's going to be positive. No matter how modest the margin. It's either we exist or we don't. Make that case to the American people. Both parties should be able to get behind it. So I'm not sensing that urgency, which is disappointing. You can make the same case, by the way, with nuclear power.
The guide from the Armstrong Advisory Group out this month, all about RMDs. We're heading towards the second half of this month and want to make sure people are aware of the brand new guide. We're also heading towards the end of the year here, and so if you are subject to RMDs or think you might be, this is the guide for you. I know it sounds pretty simple. A lot of custodians will track this for you when it comes to your RMD, but I'll tell you, when you get into the nuances of how these rules work and what it means for your future tax scenario, the rules are not simple. There are different rules for 401ks than there are IRAs. There are different rules for inherited IRAs versus the ones that you create on your own. There's different rules for Roth IRAs than there are for traditional ones. All of this and more is outlined in our brand new guide, Understanding Required Minimum Distributions. Look, the rules have changed a lot over the last 5 years alone. Make sure you understand how the RMDs will affect your financial future by calling us at 800-393-4001. Again, it's the Armstrong Advisory Group's new guide, Understanding Required Minimum Distributions. You can request it online at armstrongadvisory.com or call us at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
I discovered the biggest surprise, I think, so far in my radio career when I was speaking with Vinny Penn this morning, the radio show host out in New Haven, who asked me about Beyond Meat, and we were talking about it, and he said, yeah, I actually really like Vinny, if you don't know him, reviews a bunch of restaurants down in Connecticut area, super into great Italian restaurants, and a fan of Beyond Meat, but he was asking about it since the stock has been driven 450% higher over the course of the last week, and was wondering if there's something fundamental to their business that has changed, and my answer was very clearly it doesn't seem that way to me. It seems that once again we are getting swept into meme stock mania like we did a few years ago in 2021, and all I will say about it is buyer beware, exercise some extreme caution, and know what you're doing before you jump into any of these games that have nothing to do with the businesses themselves. Quick break. A lot more to cover in the second hour of the Financial Exchange. We'll be right back.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818. 3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
October 24th is National Food Day, a perfect time to celebrate fresh, local food right here in Massachusetts. Fall harvest season is in full swing with crisp apples, sweet pears, pumpkins, squash, cranberries, and hearty root vegetables at your neighborhood farmers market. Markets are still open, so grab your bag. Support local farmers and bring home the flavors of autumn. Sponsored by Mass Farmers Markets, helping grow farmers markets across the state. Find your local market at massfarmersmarkets.org.
The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences are putting the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping in the world-famous Megan's Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all three and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visitusvi.com.
Marc Vonner is the CEO of Veterans Development Corporation. Marc is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Marc comes from a proud military family, including his father Victor and his brother Timmy. Marc talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Marc is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Marc, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Marc Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Required Minimum Distributions. Mike, one area with some big changes the last couple of years has been RMDs as it relates to inherited IRAs. What is the lay of the land today?
Yeah, so critical things that you need to know is that for most inheritors that are not spouses, so that's your starting point. If you are not married to the person who passed away, you are most likely subject to a out in 10 rule. What has also changed is that you're required to satisfy two different rules for most folks. Again, you are required to empty that inherited IRA within a decade. You also have annual required minimum distributions based on life expectancy. So it is really complicated now for inheritors.
How does that potentially influence how a parent may leave assets to surviving children in terms of taking their incomes into account?
Yeah, well, I mean, look, it is going to concentrate this additional income in a decade time period after you're gone. And so it adds a little bit of complexity in terms of that estate planning, right? Maybe I've got two kids. One's a very high income earner. One is a little bit lower. Do I potentially reshape my beneficiaries so that they both receive the same amount, maybe after taxes? A lot of complex planning you can do there.
The guide this month is titled Understanding Required Minimum Distributions. The two ways that you can request it are by calling 800-393-4001 or by visiting armstrongadvisory.com. Again, that number is 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange. It's Mike, Mark, and Tucker with you on a Thursday morning where we've got stocks moving in the right direction. Dow up 35 points, a little bit less than 1/10%. S&P up 22 or 1/3%. And the NASDAQ up 138.6% after a modest sell-off yesterday of, about 0.5% on the S&P 500, if I'm not mistaken. Was it more? We'll find out.
I don't know. I did a big write-up on it, too. It may as well have been 5 years ago. Things are moving fast, Michael.
Oil prices jumping 5% after the Trump administration announces sanctions on big Russian oil companies. Still more to be seen in terms of the actual effect of these, but what we do know is that the owner and operator of the world's largest oil refinery in India, Reliance Industries, has come out and said that with this announcement, it may cause them to... they came up with a very political statement about, not violating Indian law when it comes to what products that they purchase or don't purchase from Russia, but they have been one of the large beneficiaries over the last several years of buying heavily discounted Russian oil in the open market in spite of sanctions on those companies. So we will see if these sanctions are enough to deter at least the Indian buyers. The most that I've seen written has not really questioned whether or not China is going to be willing to buy this oil still, and the answer seems to be yes, because they're not as reliant on the United States financial system, but we shall see.
Can we talk, as we did in the last hour, about winners and losers here? And
yeah,
because that was, naturally people might ask, well, what does that mean for me? And if you're in the East Coast, you're a loser when oil prices go up. But if you're in the corridor
Texas,
from the Dakotas down to Texas, oil country, I'm just being obviously very general here, you're a winner. The picture's a lot more complicated in terms of sizing up.
Yeah.
Winners and losers relative to, say, 20 or 30 years ago, thanks to fracking techniques that allow us to get to hard-to-access oil.
The other big question that we would pose here, and look, I am personally not in the business of trying to guess where oil prices go on a month-to-month or year-to-year basis. I don't know anybody that's made a successful career on that path, although I'm sure many have tried. The benefit that we have seen to inflation over the course of the last year from at least moderating, if not dropping oil prices and gas prices has been pretty significant. It has helped inflation stay relatively modest, and I think very clearly, if that happens to go in the wrong direction, then this 3% inflation scenario that the Fed has been more than willing to accept and live with could quickly become a 4% inflation number or anything beyond that.
That's another important implication of all this.
That is an important implication because it affects everything from, well, most importantly, the Fed's willingness to succumb to further rate cuts and the president's ability to drive them towards that and everything else alongside that, whether it's credit card rates, mortgage rates, car loan rates, all of those other items that are tag along with this overall strategy.
And that point can sometimes be confusing because we often say the Fed, through its control of the supply of money, heavily influences, effectively controls long-term inflation. In the short term, there are things that push average prices as measured by, for example, CPI or whatever your preferred measure is. In the short term, there are things that cause the average to go up because, for example, the price of oil, which is very flexible, it changes every day throughout the day. So if the price of oil goes up, everything you buy may not go up. Other producers don't change their prices as frequently. Said differently in kind of economic jargon, some prices are rigid or sticky if you prefer, while others are very flexible. So an oil price spike, a shock in, again, economic jargon, can cause inflation to go up. The Fed's policy is generally, well, oil prices are as likely to go up as go down. We're going to look through that. But they can't ignore it completely.
Yeah, I was going to say, they're willing to look through it, but if it's bringing overall inflation to 5%, then
they're going to feel the heat, and it could also push up expectations, which are an important component. We learned this lesson in the 70s, before the 1970s. Inflation expectations weren't part of anybody's inflation modeling process. Now it's widely accepted that they must be, and that's why oil price movements are a concern.
It has been a busy earnings week as well. Tesla reported yesterday after the bell. Stock is down about 2% in early trading. They beat on revenue, missed on earnings. The big push for Tesla sales was ahead of the September 30th deadline on the expiration of the EV tax credit, so that is now passed. And really the entire earnings call had little to do about their traditional EV sales business model and much to do about their future as a robotics and self-driving car company, an autonomous taxi company, which there is a lot to be proven on that front, but that is kind of always been the mantra of Elon Musk and his car company, which is massive promises for the future and investors' willingness to give him extra rope on that.
It's so hard to attach a valuation to a stock when so much depends on highly uncertain perspective that is future. I'm being redundant here, but outcomes. We've got Cybercab intended to roll out in many cities. The intention is to roll that out in many cities next year. We've got Optimus, the human-like robot, which is supposed to go into mass production next year. And we've got the Megapack, or whatever he's calling his new residential/commercial. Scheduled to be rolled out next year with no idea whether they'll roll out on time, et cetera. How do you use traditional valuation methods to slap a fair price on this company? I just don't know.
Well, it's been a busy earnings week this week with 89 S&P 500 companies reporting. It'll be an even bigger one next week in terms of market cap. We'll have Visa kicking things off on Tuesday after the bell, United Healthcare Tuesday before the bell, Novartis as well before the bell. Wednesday, Microsoft, Google, Meta all reporting earnings in addition to Caterpillar and others. And then Thursday, Apple, Amazon, Lilly, MasterCard, Merck all reporting earnings. So big heavy hitters just between 5 companies there. I count well over $10 trillion worth of market cap reporting. So big potential market moving week next week when it comes to earnings as well. Let's focus in a little bit more on that inflation scenario. We are going to get a report tomorrow on inflation. The context here important because we have a Fed meeting in addition to all the earnings next week. They're going to be operating pretty blindly. They have no jobs data. This is the first inflation report that we've gotten since the government shut down. What do you suppose? I mean, I don't need you to predict inflation. My guess is somewhere around 3% is where we're going to see in this inflation report. We'll see if there's anything that shocks us. But how is the Fed going to, I guess, voice their opinion on the economy at this upcoming meeting? Because they are flying fairly blind.
They are, but they can use, and any researcher would do the same thing. We do it internally, but we don't, use it necessarily to make major decisions. It's more as a check of our intuition. You can estimate based on past values, likely future values, assuming the process that generates those values is the same. That sounds more complicated than it is. But so that my point is there are ways for researchers, including those obviously, starting with those arguably at the Fed, to fill in the gaps using statistical techniques. The methods for doing so are pretty tried and true, but they're subject to a lot of uncertainty, as you point out. The Fed is faced with ongoing elevated inflation as measured by things that do a good job capturing the trend in inflation, that do a good job of filtering out some of those one-time influences we were talking about a moment ago, such as an oil price shock. Those measures like median inflation and other outlier trimming methods point to elevated underlying inflation, somewhere in the threes. High 2s, 3s, which is way above the Fed's 2% goal. We know this with certainty.
Let's take a quick break. The entire reason we're getting an inflation report tomorrow has everything to do with Social Security and cost of living adjustments. We're going to be joined next by Marc from Bankrate on their survey on Americans' expectations for Social Security. That's next with Marc on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences are putting the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping in the world-famous Megan's Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all 3 and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visitusvi.com. Cushing & Dolan want to help you avoid costly mistakes when it comes to gifting assets to your children. Their brand new guide, Making the Most of Gifting Assets, shares crucial strategies to help you protect your legacy and your family. Many people think gifting is always a good thing, but if it's done the wrong way, it can create real headaches. Even well-intentioned gifts can cause complications if your children are dealing with financial pressure or legal issues like a divorce. The guide also explains how a major gift, like a home or vacation property, could come with hidden tax consequences that may impact your entire estate plan. Before you make any big moves, arm yourself with the facts in this new guide from Cushing & Dolan. Call 866-848-5699 right now to get your copy. That's 866-848-5699. Or request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zada from the Armstrong Advisory Group. Required minimum distributions, or RMDs, may seem simple, but there's a lot more to them than just taking money out of your IRA. RMDs impact how much you pay in taxes, and they can push your income into higher brackets. And if you miss one, the penalties can be steep. They also affect how much your heirs actually get to keep, which makes timing and strategy crucial. If you have multiple accounts, it's important to know which ones you can combine and which ones you can't in order to help you avoid costly mistakes. Our new guide, Understanding RMDs, shows you how to navigate the rules, limit your tax burden, and plan ahead for your legacy. Request your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and this year's DAV 5K is Saturday, November 8th at Castle Island. The race is now sold out, but you can still take part by making a donation to support our great American heroes. Please visit dav5k.boston to make your gift today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Marc Hamrick is the Washington Bureau Chief and Senior Economic Analyst with Bankrate and joins us now to talk about Americans' attitudes towards Social Security and retirement generally. Marc, thanks so much for joining us. Appreciate it. Talk to us about who you surveyed and the main findings here on Americans' attitudes towards Social Security right now.
Good to be with you, Mike. Well, this is like most of our surveys at Bankrate of everyday Americans. We work with survey firms to get a cross-section of the American public. And so this is meant to represent essentially the way that Americans feel on this particular issue. The key finding really is that a majority of Americans, and in this case, we're going to boil it down to what I'm going to talk about right now, and those who are not yet retired or so-called non-retired adults, say that they do expect to be reliant on Social Security to pay necessary expenses once they do retire. At the same time, a little more than 3/4 of Americans are concerned that they won't get their promised benefits when that time comes.
I've found that most Americans that I talk to are particularly salient on the issue and aware of the issue, that this is something that is going to run into funding issues well within their lifetimes. My biggest concern here would be that with that knowledge, Americans make decisions around Social Security that aren't all that logical. Do we know if this fear is resulting in specific decision-making on behalf of Social Security beneficiaries? I'm thinking about working longer or taking benefits earlier that, could potentially compound problems for their own financial situations.
To be blatantly honest, that's not what we were surveying on, but I think we can surmise anecdotally that obviously there are a range of potential outcomes or behaviors that are related to the skepticism that the full benefits will be available. And it's really problematic because, we have, as measured, for example, by Gallup, very low trust in institutions in this country. It's been going down for a long time. Congress is not at the top of the list of trust. By the way, typically it's the military and small business that does reign supreme in the Gallup data. So if you're skeptical that Congress is going to do the right thing, and you do have, frankly, unfortunately, a historical basis upon which to judge, you can imagine there is a range of potential ways to deal with that. One would be what I would recommend, and that would be prioritize what you can control, and that is make sure you're saving what you can save. If indeed there is a potential benefit cut of 20 to 25% around 2033, if indeed elected officials do nothing. The other part would be, sure, work longer. The other part would be maybe you think, I want to get my money while I can and get the benefit earlier rather than waiting till full retirement age. And I can understand the logic to that. But of course, the counter of that is the longer you wait before that time, 2033, the more you get in a payout. So, it's a rather complicated situation, to say the least.
I tend to hear from younger Americans in particular who are far more skeptical about Social Security solvency and it being there for them when they get to retirement. Does that bear out in your survey in terms of generational shifts?
Sure. And so, for example, when we go across the range of adult cohorts or age groups, you've got 37% of members of Generation Z, that's those who are aged 18 to 28, say they expect to be reliant on Social Security to pay necessary expenses. So you would compare that to, that overall number of 52% or 72% among baby boomers. That's those aged 61 to 79. And again, you can come up with a number of reasons why they may give that answer. One is they have less confidence the money will be there. I would also hope that they are planning to take more control of their retirement savings, given that we are where we are with this right now.
Shifting gears a little bit just to general retirement, how confident are the people you surveyed that they are, I guess, catching up to where they should be when it comes to retirement being on track? And again, I'm sure I know you guys broke this out by generation as well.
Yeah. This is a survey that we released a month ago as a sort of precursor to the Social Security survey that we just released. And this is pretty consistent over time as well, that about 3 in 5 Americans say they don't believe they're on track with where they need or want to be with their retirement savings. And I do think that there is kind of a coming to terms with reality aspect of this as people become more senior and can, literally imagine the end of their work as opposed to being in their 20s or 30s or even 40s and thinking, oh, that's so far away from right now, either it's incomprehensible or I don't want to think about it. And when you're seeing that over the dashboard, so to speak, over the hood of your car, that's when it starts to get real. And that is a call to action, right? In other words, those who are youngest, earliest in their careers, they are in the greatest position to benefit from the power of compounding, taking advantage of the employer match from a 401k, doing what they can to live beneath their means, not on the cutting edge of the envelope, to live their best Instagrammable life that isn't necessarily, unless you become an influencer, isn't going to help you. And then those who are more senior, you can still make changes that make a difference. And that could mean waiting to tap Social Security to get the higher payout. That could mean working longer, maybe not full time, but even just working part-time, because some income is better than no income arising from employment.
Yeah, in spite of my best efforts, Mark, my 40-second TikTok dance videos are just not getting the following I'm looking for. But really appreciate you being here, Mark. Excellent research as always, and really interested in the survey and looking forward to having you on again soon.
Always a pleasure. Thanks for having me.
Thanks.
All right, time for trivia here on the Financial Exchange, and today is Weird Al Yankovic's 66th birthday. Weird Al's first top 40 hit song came back in 1984 when he parodied his first Michael Jackson song. So our trivia question today, what was the name of Weird Al's first Michael Jackson parody song? Once again, what was the name of Weird Al's first Michael Jackson parody song? Be the fifth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
As we head towards the bottom of the hour here, we've got all three major indices in positive territory here. Price of oil continuing floating upwards, but not quite as bad as it was earlier. We're up now about 4.94% on West Texas crude. And gold prices, which have been bouncing around all of the last week, continuing to do so. Today, gold up $98 an ounce, 2.4%. And silver also up in trading this morning, up 2.73% in early trading. We're going to take a quick break. When we come back, Tucker's going to give us a full market recap, and then we're talking Fed when we return.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. If you're approaching your 70s, you might be thinking about slowing it down, but the IRS is just getting started. Required minimum distributions, or RMDs, kick in starting at age 73. And if you were born in 1960 or later, that number jumps to 75. RMDs are more than just a box to check. They can impact your taxes, your income plan, and even what you leave to your heirs. If not done properly, it could mean big penalties, but getting them right might help keep your money working for you. Our latest guide, Understanding RMDs, breaks down how they work, when to take them, and strategies that may make them less of a tax headache and more of a financial opportunity. Request your copy today by calling 800-393-4001 or by visiting armstrongadvisory.com. That number again is 800-393-4001 or armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences are putting the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping and the world-famous Megan's Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all three and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visitusvi.com.
Marc Vonner is the CEO of Veterans Development Corporation. Marc is a career military man, having served nearly 20 years, and we are so proud to have him and his business as a key partner and a presenting sponsor of the DAV 5K Boston. The DAV Department of Massachusetts does incredible work, and it's one of the first organizations that Marc became familiar with after his military service ended back in 1984. As Marc built his company, he knew he'd be giving back to fellow veterans who needed jobs, support services, medical supplies, and so much more. Marc works with disabled veterans every day, and it's one of the key reasons why he's such a big supporter of Dan Stack, the DAV Department of Massachusetts, and the DAV 5K Boston. You can join Marc Vonner and his team and make a donation to the DAV Department of Massachusetts or become a sponsor of the DAV 5K Boston. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about the implications of gifting assets away. Todd, since the estate tax laws are projected to change on January 1st of 2026, significantly reducing the estate tax exemption, does it make sense to gift away assets right now?
You know, it's a big question mark. You have to think of a few things. One, look at the size of your estate. If the exemption falls to $7 million each and you're married, you can still die with $14 million of assets and not have an estate tax. So gifting might not be important from a federal gift tax situation. But the state exemption is only $2 million, so you can only shelter $4 million. So you might want to gift to reduce your state estate tax. However, there's basis to consider. If you give away low basis assets, you're trapping capital gain. And to do that, you might be paying more in capital gains taxes later when the kids sell the assets than you're saving in just Massachusetts estate tax. So you really got to think about whether it makes sense to gift or not. And if you're going to gift, you should probably set up a gifting trust. People might be gifting large assets away and not gift the assets directly to a child. Have them in a trust for the child's benefit and then protect those assets for them.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699. That's 866-848-5699, or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets in positive territory amid another batch of third quarter earnings from the likes of IBM and Tesla. Wall Street's also seeing a jump in oil prices after President Trump announced new sanctions on Russia's two biggest oil companies. Right now, the Dow is up over 0.1% or 76 points. Higher. S&P 500 is up 0.4% or 27 points. NASDAQ is up nearly 0.75% or 162 points higher. Russell 2000 is up about 0.7%. 10-year Treasury yield up 4 basis points, now at 3.993%. And crude oil up 5.3% today, trading at $61.62 a barrel. Tesla shares falling nearly 2% after the EV maker posted a 37% drop in quarterly profits, citing R&D spending and lower tax credit revenue. Meanwhile, IBM stock is dropping almost 3% now, despite the computing company swinging to a quarterly profit and reporting higher earnings, noting that customers have shifted from experimenting with AI to using it at scale. Sticking with tech, where several quantum computing stocks are seeing gains after the Wall Street Journal reported that the Trump administration is in talks to acquire equity stakes in several quantum computing firms. IonQ, Rigetti Computing, and Quantum Computing are all up anywhere between 9 and 12%. Elsewhere, American Airlines narrowed its quarterly loss, saying it expects to end the year more profitable than analysts had been anticipating. That stock is up 5%. Las Vegas Sands jumping 12% after it posted solid third quarter results. And Intel will report earnings after today's closing bell. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: what was the name of Weird Al's first Michael Jackson parody song? That would be Eat It. Laura from Plainfield, New Hampshire is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Laura. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
We will have a Fed meeting and press conference on Wednesday of next week amidst the heavy earnings that we were talking about earlier. Very widely anticipated they will be cutting rates by another 0.25%. The current Fed funds target is sitting at 4 to 4.25. According to the Chicago Mercantile Exchange, a 99% probability that the rates will come down to that 3.25% to 4% range. Again, we alluded to this a bit earlier, but they are operating somewhat blindly. They certainly have their existing models, but they do not have government data. They also kind of surprisingly lost access to some private data. So ADP is a private payroll provider, and we have quoted the data they put out on jobs on a regular basis. And for whatever reason, for the last several months, they have cut off access to the Fed for that data. And I don't know, based on reporting, I don't really have a real semblance of the reason why. Maybe ADP wants to get paid, but there's been no real reporting on why ADP terminated the access to all that. I don't know if you have any.
No special insight. No special insight. Sorry.
But in any
not
case,
helpful though. I mean, ideally, go ahead.
Yeah, I mean, ideally you would have whatever you can put together.
So ADP payrolls are taken obviously from a different sample than the federal government uses.
Sure.
The federal government's measure is far more comprehensive, and it's a random sample. ADP's sample is not random. They just survey their clients. But the changes are
I guess it's probably not even a survey, right? It's probably just a census of their clients.
It's just exactly. Yeah. Exactly. But the changes are pretty highly correlated, and the work we did on this internally suggests that if you're a forecaster and you want to forecast next month's payrolls change, it helps in your little model to include what ADP did, which you learn a couple weeks or whatever earlier. So it does help you if you're a forecaster. And if you're a Fed forecaster using similar methods, because all researchers do, you're worse off for not having that data, for what that is worth.
The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences have put the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping in the world-famous Magens Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all three and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visit usvi.com.
There's a piece in Market Watch today that I think brought up some fair points, but I've never seen someone please so passionately about such an obscure financial demand. So this piece is about borrowing from a 401k, which you are generally allowed to do. The plan documents prevail, but there's a law there that you can't borrow more than $50,000. And it's been set there for 40 years, and this author considers it an outrage that it hasn't been indexed for inflation. And to some degree, you know, I tend to agree here that a lot of these things should be indexed to inflation. And certainly it's, I can't think a completely separate issue, but, you know, he brings up that you can now inherit $30 million tax-free from mom and dad without having to pay any taxes on that inheritance, and that number is going to be indexed to inflation. So why wouldn't you index this? And I think it's a worthy cause, but I don't know how relevant it is to the average person.
This will be a nightmare if you're a record keeper to update your systems every year. Yeah, that's when 401k laws change. They don't often. The pace is pretty glacial, but when they do change, it's a huge undertaking for your big record keepers like Fidelity, Vanguard,
in fact, they
Price.
Forced Congress to kind of delay some of these things with the most recent changes on Roth 401k contributions.
That said, we do update contribution limits every year, and record keeping software has to accommodate that.
Yeah.
But it would place the burden on record keepers. That's one drawback. The other much bigger drawback, and this is why Congress isn't updating those limits. And it is obscene that a residential mortgage loan, which has a longer repayment period on a 401k loan and thus a lower payment, hasn't moved in 40 years when the median home price has tripled in 40. That is a little bit obnoxious. But, of course, there's a policy motivation here, which is they don't want people tapping. And it's a good policy motivation. Yeah. They don't want people tapping their 401ks.
And by the way, I think currently like 13% of 401k holders have an outstanding loan.
Is it really that low?
It's not a huge portion of people based on data that I found. So I just don't see this as such a big issue. I think there are plenty of outrages out there when it comes to this sort of thing. One of the biggest ones to me that has just always bothered me. So if you work for a company that offers a 401k, you're allowed to put away now, I don't even know what's the 401k contribution limit for 2025. Is now $23,500. If you do not work for an employer that offers a 401k, then your only option is to contribute to an IRA, and your limit there is far lower. And I've always just asked, why? Why would that difference exist? Just because my employer is too lazy or too cheap to set up a 401k, it means that I'm not allowed to save for retirement in the same way that other people are? It seemed just obscene to me and just an easy thing to correct. I'm guessing it's because big influential financial companies like having that 401k business built in. But yeah, there's a lot of these idiosyncrasies across the financial system, and I don't know. This one didn't really get my blood pumping, if I'm being quite honest.
No, it's minor in the scheme of things. Plus, it's not a bad thing that policy discourages people from borrowing. From their 401k.
Yeah.
And
I'm not sure it's something we should encourage. That's why they haven't
against your future. Increased the limit. Yeah.
Let's take a quick break. When we come back, Stack Roulette on the Financial Exchange.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Hi, this is Chuck Zada from the Armstrong Advisory Group. Required minimum distributions, or RMDs, may seem simple, but there's a lot more to them than just taking money out of your IRA. RMDs impact how much you pay in taxes, and they can push your income into higher brackets. And if you miss one, the penalties can be steep. They also affect how much your heirs actually get to keep, which makes timing and strategy crucial. If you have multiple accounts, it's important to know which ones you can combine and which ones you can't in order to help you avoid costly mistakes. Our new guide, Understanding RMDs, shows you how to navigate the rules, limit your tax burden, and plan ahead for your legacy. Request your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Marc Vonner is the CEO of Veterans Development Corporation. Marc is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Marc comes from a proud military family, including his father Victor and his brother Timmy. Marc talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Marc is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Marc, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Marc Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Cushing & Dolan know that gifting assets can be one of the most emotional and challenging parts of estate planning. Their new guide, Making the Most of Gifting Assets, can help you learn what to consider before making a major gift, like your primary home or a vacation property, and avoid unintended tax problems. Call 866-848-5699 to get your copy, or request it online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
There have apparently been some disappointed investors this year with a kind of obscure new investment product that's out there. It's not new in idea. The idea is using leverage in investing decisions, which has been around forever.
Yeah, just borrowing money to buy your... We all use leverage to buy a house, for example.
Yep, and it's prevalent
which
in
is why when you're
financial
underwater, it's worrisome. So on the underwater concept applies here. Sorry, Mike.
Right. And some of the new ETFs that have been coming out this year have been focused on not only... It's an ETF that allows you to own a single stock or try and mirror the price return of a single stock, but with leverage. And unfortunately for some investors, they're learning kind of a hard lesson about the difference between owning a security with leverage and owning a fund that attempts to do something, because some of those shares are not doing a terribly good job of tracking their underlying security. And in one case, the actual shares of the company rose 28% in the 12 months that ended Wednesday, whereas the fund that tried to track it with a leveraged exposure went down by 65%. So not that you are an expert, Mark, in leveraged funds that track single companies.
I have no idea how that could happen. I would need to talk to the manager.
But I think the important thing here is that you actually have to read those really annoying packets that come out to you that the SEC mandates that disclose how these things actually work. I mean, look, when you're investing in a brand new thing that didn't exist before.
I mean, again, using leverage means I put up $1 to buy $2 worth of something.
Sure.
So if that doubles, my 2 goes to 4, but I only put in 100.
Mm-hmm.
So my return would be not 100%. But 200 or 300, I'm having trouble doing that.
Yeah, minus the interest.
Yeah, minus whatever the fee is. Yeah, sorry, that's embarrassing. So I'm not sure how, if the underlying asset goes up, given the fact that you didn't commit the full amount of the investment, how it's conceivable, even remotely, that you could lose money when the underlying moves in your favor.
However, that's precisely what happened in this case. And I don't, again, depends on how they are conducting that leverage and on what time frame, I suppose. But in any case, there are a ton of new financial products that are being put out there every day. Yeah. We talked about earlier this year how the number of outstanding ETFs surpassed mutual funds for the first time, or maybe it surpassed individual securities this year. I don't recall, but it was one of the other.
Yeah, more ETFs than stocks. Than publicly traded companies.
The point that we made at the time was just be careful. because a lot of these do not have a track record. A lot of these are, putting out there an objective that may or may not be accomplishable, and they're required to disclose it all. I think of a lot of these hedge strategies where there's no downside potential or capped downside or limited downside potential, and it screams it at you right in the disclosure document that these results can't be guaranteed, and this is an objective, not a financial guarantee. It's still a security. It can go up and down. And yet I think a lot of those warnings go largely ignored.
I just don't understand. And the example I gave, the return was 300% instead of 100%.
Sure.
And that's how you just, I don't understand how this is, what you describe is even possible, absent malpractice. And possibly, well, I don't want to use the F word, being fraud, but you have to suspect that if something goes that badly. Something wasn't happening under the hood something happened under the hood that was very different than what was being represented. But I don't know the particulars. I probably shouldn't say that.
What do you have for us for Stack Roulette, Mark?
This story that Tucker keeps talking about the federal government taking more equity stakes is really grating. We criticized it when or at least I did. I think you did too.
Yep.
When the Biden administration larded chips companies that were having no problem tapping public markets with public funds. Trump administration's taking this to a new level. It's taken shares in Intel, a so-called golden share of Nippon Steel, whatever the hell that means, him putting board members in as he pleases and vetoing major decisions. Multiple rare earths companies. The federal government now has an equity stake in, it's got to be a dozen, or will be after these equity stakes are consummated, like 10, a dozen companies. Like a lot of people who would normally vote Republican decry socialism. This is the definition of it. They're going to meddle in how these companies are managed. There is no capital shortage. Stocks are at record highs.
Yeah.
These companies are all in interesting industries. Venture capitalists are overflowing with dry powder. There's no evidence that this industry is having trouble getting capital, and it's not clear that it's nationally vital. This administration just likes owning shares in companies. Those companies are going to be favored. It's going to cause other companies to, rather than innovate, angle for getting in the good graces of the Trump administration. Ooh, do we contribute to his ballroom? Maybe they'll give us some capital. This just sets such a bad precedent. A lot of people are worried about the next mayor of New York City owning a few grocery stores. The scale of this and the implications for the economy as a whole are far greater, far more dire.
Whenever stuff like this comes up, I always just like to put it in perspective of, does the average American think this is a good or bad idea?
They don't know about it, Mike.
I don't think the average American knows about it.
We're trying to, but there are major news channels that aren't talking about this at all.
But I think a lot of them would say, that's okay. I trust the president. I elected him because he's a good businessman, and this is precisely what I want him to do. And I'm going to take your perspective on that and say, you buy that. The problem is the precedent, because when the president leaves office, the United States government is still likely to own shares in these companies, and it is going to be beholden upon the following president to be the steward of this, and then presumably continue to expand.
And how do we get out of these? If the U.S. government at some point, if President AOC, God forbid, but if it happened in 5 years, forgive me, but God forbid, then again, would she buy fewer companies than this guy's doing? How do we get out of these positions? If the next president announces they're going to unwind them, it would tank these companies. And I'll say again, where is the evidence that they're having trouble raising capital?
Yeah.
And why would you want to pick these companies as the winners in the quantum? In this example, it's quantum computing, but there are lots of other examples with this crowd.
I think we should just always be highly suspect of the idea that any government, U.S., abroad, is going to be good at picking winners and losers. I think there's very little compelling evidence to support that. The Soviet Union attempted it. China has attempted it. The United States is now attempting it. I think that the lesson here is that the government, when it comes to markets and the economy, the job that they should play is to set conditions for good investment and let the markets figure it out. There are exceptions, right? When the Great Depression happens, sitting back and raising taxes is probably not a good idea. But in normal market environments where the system is working, cash flow is moving, and there is liquidity, the government's job, in my view at least, should not be to step in and say, we're taking stakes in companies. You can set the conditions for that to happen, but it doesn't need to be done by the United States Treasury.
Yeah, it's really annoying that we're still having these discussions. Look, there are arguments over what's vital. Should the federal government help industries?
But there are ways to do it without taking equity stakes.
You don't take funding away from colleges that create, forgive me, but this is another thing they're doing that's totally backwards and counterproductive. Good research happens in colleges. That research is then disseminated out into the world. It becomes a public good. We can all use it. They're defunding college research and at the same time effectively showering private sector companies with favors.
Markets are in positive territory. NASDAQ leading the way up 0.75%. S&P up 0.4%. The Dow up 0.1%. That is all the time we have for today, but we will be right back at it tomorrow with a CPI Friday. Have a great day, everybody.